Time now for the markets with Leighton. A meat packing facility in northeast Mississippi is closing, you say?
That's right, Artis. Over 150 people will be out of work in less than 2 months. Also ahead this week, U.S. chicken stocks are way down. Cattle prices may increase, while the corn sector is described as pacing itself as February begins. The latest cold storage report gives testimony to action taken by the chicken industry last year. Supplies of poultry are way down in the United States. Extension Ag economist John Michael Riley discussed this information on Wednesday, as well as his outlook for chicken as 2012 progresses. John Michael, last year's production cuts by the poultry companies are being reflected now in a new cold storage report?
That's correct. Last week we got a cold storage report out said poultry supplies were down 16% from where they were at the year previous. That's a pretty deep cut for an industry that does maintain a pretty steady supply. The industry was experiencing a lot of negative news throughout the year in terms of just high feed prices, lackluster economy, low output prices. All of that culminated to a less than desirable year for the industry. And we really started to see this take place probably about the turn of the middle of the year. From May till October, egg sets and chicks placed in houses was down about 11%. And so this whole overall aspect was really causing the industry to pull back. We heard a lot of news of poultry industries or poultry companies going bankrupt. So overall, 2011 is probably a year that the industry participants would probably prefer to forget.
Because basically when it costs more to produce chicken and sales are weaker or down, you can do nothing but cut production if you
that's what they were.
Stay in business.
The market forced their hand there, and they had to pull back. And the good news is that two things. You know, poultry is the go-to protein in a down economy because it's a low-cost protein, and also it is an industry that can turn around pretty quick. It's a short production time. So they saw the handwriting on the wall, and they did react and started pulling back on production. And the result of that is, if you look at the last 2 or 3 months of 2011, output prices did pick up just a notch up about 4% from month over month.
And you did say that reports now indicate sets are picking back up. So apparently we've kind of seen the worst of this. The bottom has been reached, and we're coming back out of it.
Well, you hate to say you've seen the worst of it, but based on what we're seeing, the bottom has been reached for the present time, and egg sets and egg chicks placed are coming back up.
And briefly, feed grain prices. What's the outlook that the industry is going to deal with there?
It's still looking like those are going to be pretty strong. Prices are going to be up pretty high compared to normal levels.
Growth in exports is one reason there's a lot of optimism in the beef sector at this moment. At the Cattle Industry Convention in Nashville this week, it was standing room only for one session for producers on the issue of profiting during volatile times. Analyst Tom Fitzenmeyer shared his thoughts recently on whether the current price picture is sustainable. He was on Market to Market.
I think if we were just left to the domestic beef market, we wouldn't be able to achieve these kind of prices. But the exports have allowed that to happen. We've gotten the domestic prices up to the point, or right up to that point where every time we've hit it in the past, it's been a problem because retailers can't move the beef, and we're gonna face that again soon over the next month or two and really see if they can do it. The packers have really bid up for cattle in spite of the fact that they're in the red this week, more trying to preserve their market share as much as anything. So we'll have to see if that propels us. You know, the way the charts are setting up, you could see another $5 to $6 put on this cattle market here, chart-wise.
As Farmweek continues, let's look at a trivia question about the cattle market. Here it is. What country is the second largest importer of U.S. beef? Could it be South Korea, Mexico, Australia, or Canada? I'll tell you in a couple more minutes. A Sara Lee plant that's been operating in northeast Mississippi for 15 years is closing up March 30th. The facility in Shannon, just south of Tupelo, produced Brian Smokey's cocktail sausages. 155 people will lose their jobs as Sara Lee continues its efforts to, quote, consolidate resources and simplify operations. The processing of Brian Smokey's is being moved to existing Sara Lee plants in Kentucky and Missouri. Well, according to the USDA's latest U.S. export sales report, corn exports were down 29% from the previous week and 11% off the 4-week average. Analyst Sue Martin recently discussed how she thinks the corn market is shaping up for this year.
We're in a year, I look at the year of 2012 as a year that's mildly bearish, let's put it that way. Some people may be more rampantly bearish, but I think we've got a year where we are in a negative trend, but we're not ready for that dump and dive type thing. I think that we have a market that's pacing itself. You've had the highest basis level for a month of January in 10 years. I think that farmers are probably holding at least 50% of the crop in their bins. They're not interested in selling anything now until summer. They want to see what the weather's like.
Just ahead of the feature story, here's our trivia quiz answer for this week. D is the correct choice. Canada is the second largest importer of U.S. beef.